Hi, I'm James Dunn. Welcome to the Inside Network. Welcome to INDepth, where my guest is Mishan Dahia, Senior Investment Analyst at Atchison. Mishan, welcome.
Thank you.
Mishan, we're going to discuss the US election. Building up to the US election, of course, there's been so much volatility in markets. What do you think markets, and in particular bond yields, are saying about what they believe is likely to happen?
Thank you, Jimmy. So it's interesting. I was looking at the 10-year Treasury yield and where it's currently sitting. And right now it's sitting at 4.2%, which is actually the highest it's been in the last 12 weeks. And markets, as it currently stands, are pricing in a 65% chance of Donald Trump actually winning the election, with the swing states all in favour of Donald Trump. Interestingly, looking at the International Monetary Fund, which is a slight discrepancy from what we're just chatting about, but it actually just released data talking about the inflation rates that are also occurring around the world. So the International Monetary Fund have actually said that they expect inflation that it's currently sitting at 5.8% to drop down to around that 3.5% from 2024 into 2025, whilst Australia is still expected to have incredibly high inflation. It's actually positioned second out of 42 developed nations, which is quite a juxtaposed situation there.
Speaking about Australia vis-a-vis the US election, there's so much emphasis on it here. Sometimes you feel more than there even is in the United States. But when it comes down to it really, why does it matter so much to Australia?
Well, firstly, the US makes up a considerable part of the global economy as it stands. So within the MSCI world, more than 65% of it is the S&P 500, which is some of those leading companies in the US. So that's number one. And Australia makes up a very small fraction of the MSCI world in general, sitting around that 2% mark. So overall, the US has a huge implication in regards to how the markets position themselves. Secondly, the waning relationship between China and US has direct implications on that of Australia. So Australia exports a large percentage of our major exports to that of China, some of our major resources. Over 30% of our exports go from Australia to China. And out of that positioning, about 60% of that is iron ore, 20% is coal, there's about 10% in LNG, and then other resources as well. I think it was 5% in earth minerals, like rare earth minerals, and about 5% in agriculture. So we've got a large reliance on our relationship with China, and obviously 50% of our economy is in the financial and material sector, so that has huge implications on those exports going to that of China, but then the relationship between China and US has dramatic implications on Australia.
What are the implications regarding taxes, trade and tariffs, and immigration?
So it's really interesting, the juxtaposition between that of Harris and Trump in regards to their policies. So Harris has actually propositioned herself, stating that she's actually going to increase corporate taxes from 21% to 28%, whilst Trump has gone the opposite path and said he's actually going to reduce corporate taxes from 21% down to 15%. Now, the implications of that is reducing corporate taxes helps stimulate business growth, which therefore allows for greater jobs and therefore the proposition of greater innovation in the market. And that's what Trump's trying to push for. Whilst on Harris's side, the aim of increasing corporate tax is to increase government revenue, which can then be spent on helping out small and middle-income earners and businesses as well. So that's on the taxes standpoint. From a trade standpoint, you've got Harris holding concentrated views in regards to trade tariffs for aluminium and steel in the United States, whilst Trump has taken more of an aggressive stance, stating that he's going to provide a 60% tax on all imports from China into the United States and a 10% tax for the rest of the world into the United States. Now that has huge implications, and on the weekend, just reading some of these reports, Mexico has actually become the number one importer into the United States. No longer is it China. As of Q4 2023, Mexico has actually overtaken China in regards to imports into the United States, which just shows the dramatic ramifications of these trade tensions and what's happening. And more so, to that point, container loads going from China into the United States has actually reduced, whilst China into Mexico has actually increased by 22% in the last 12 months, which just shows the dramatic shift in regards to how markets and supply chains are positioning themselves. And additionally to that, some of the largest businesses from China are now positioning themselves in Mexico to benefit from, there's an agreement there between the United States, Mexico, and Canada in regards to like the North American agreement.
The NAFTA.
NAFTA, yeah. And they've actually provided that catalyst to allow for those economies in North America to trade with one another. And that's why China are now positioning themselves so heavily into the Mexican region to allow themselves direct access into the US as long as those are produced by Mexico. So Chinese companies, as long as they're produced by Mexican, allow for that trade to be reduced and therefore benefit from that.
And what are your thoughts on immigration as a policy battleground between the two?
So Harris is promoting immigration, asking for an increase in 15% of skilled migrants into the country, whilst Trump is reducing the amount of immigrants into the country. On top of that, Harris is asking and requesting for a legal pathway for DACA recipients. So DACA stands for Deferred Action for Childhood, which pretty much means allowing all illegal immigrants that enter the country below the age of 16 to have a pathway to get acceptance and citizenship into the country. Now, on the opposite side, you've got Trump, who's actually trying to remove or extradite DACA altogether. So you can see there's a complete difference there in regards to immigration policies. The removal of immigrants, as Trump requests, would, as a result, cause some form of social instability. And on top of that, create a scarcity of work, which therefore results in increased wages and increased production costs, and therefore can result in increased inflation. On the other side, you've got Harris trying to promote this immigration, which therefore promotes growth, more taxpayers, more skilled workers into the economy. So they hold two completely different views. I'm not saying which one's right or wrong, but they're completely different in that instance.
And what are your thoughts on regulation, energy and defence? Again, very large policy differences that the candidates are putting to the US public.
Absolutely. So Harris is aiming to reduce CO2 emissions by 40%. And she aims for net zero by 2050, along with wanting to rejoin the Paris Agreement. Whilst Trump, on the other hand, wants to slash regulations, roll back on the Dodd-Frank Agreement, which is considered predatory lending, and also reduce EPA regulations and trying to cut costs by about 30%. Now, the aim behind slashing the regulations is to reduce any associated red tape, especially for regional banks, and promote growth and promote development and allow businesses to just be businesses and run as efficiently as possible. From a defence standpoint, you've got Harris wanting to maintain defence spend and push for diplomacy, whilst you've got Trump trying to boost defence spend, create self-reliance from NATO, and also pare back aid from Ukraine, whilst Harris on the other side wants to maintain support for Ukraine. And then in the energy standpoint, we've got Harris wanting to invest over $2 trillion in green energy. And this therefore aligns with the Paris Agreement, along with aiming to limit global warming and adhere to construction, manufacturing and green jobs, which is one of her key advocacy positions that she's pushing for. On the other side, you've got Trump wanting to expand fossil fuel production, 20% for oil and gas and 10% for that of coal. So he's prioritising economic growth and energy affordability. And a key push from him is a free market approach where the private sector drives energy decisions based on profitability rather than government intervention.
So what are the short and medium-term implications of all these policies? Investors look at this, first of all, obviously from an interest point of view, they're interested in it, but secondly, on the asset classes.
Absolutely. So from Harris's side, as we alluded to with that $2 trillion energy push, she's really pushing for wind, energy, solar, all of these green energies to make up a huge part of the profitability of America's future. Healthcare through the Affordable Cares Act is another big push that she's making. And that leans into providing more support in the healthcare space, whereas Trump was actually reducing his healthcare exposure, but not because of public spend, but rather trying to prioritize private companies to provide more innovation and growth through that sphere. So we've got wind, solar, EV charging stations and green technologies for Harris. We've also got the healthcare piece and the infrastructure through the $2 trillion energy piece that she's playing out. And then on Trump's side, from the short to medium term, we're looking at US defense stocks, European defense stocks, US coal, oil and gas to make a huge comeback and revival through a lot of the slashing of the regulations that Trump's trying to impose, along with regional banks through rolling back the Dodd-Frank agreement, and US small caps are expected to perform quite strongly in that environment as well.
And what about the currency? Obviously, the US dollar is the most influential currency on Australia. It's a crucial consideration for every offshore investment, which all investors must make. But on the other hand, Mish, it is extremely difficult to predict. Can we draw any inferences about what might happen to the US currency vis-a-vis the Australian dollar?
Yeah, it's interesting. And it also, there's always going to be short-term and long-term implications from not only the US election, but what's happening globally, especially with the demographics and the geopolitics that are surrounding the world. We're talking Middle East, we're talking Ukraine, and the China-US decoupling piece that's also playing out. We're talking, referring to what might happen if Trump was elected and the push for increasing tariffs and the ramifications that has on the China relationship and the US exporting goods and the implications there. So there are a multitude of factors that play into currency. From a short-term perspective, the expansionary nature of both policies really could expect, especially from a Trump standpoint, if you're going to increase tariffs, that can put a lot of pressure on the US dollar and therefore expect the US dollar to slowly start to rise, and therefore that pushes down on the Australian dollar. But what's most important is that you have a framework and a philosophy that you stand by within your investment committees and understand what it's going to take and what you're actually looking at, not only from a currency standpoint, but also from an asset class perspective and how much you're hedging associated currencies as required.
Which leads me to my last question. As you mentioned, every investor must have a framework and a policy and a strategy and be very disciplined in sticking to that, regardless of the noise in the market. And the question is, with regard to the US election, is it ultimately just noise for the markets and investors, and is it business as usual?
It is mostly business as usual. Markets, at the end of the day, despite everything that's just been said, are non-partisan, meaning they're not really swayed that much, whether it is a Harris or a Trump that gets elected. Now, the best way to actually demonstrate that, yeah, sure, there might be small, short-term and medium-term implications. But over the long term, interestingly, we went to New York a couple of weeks ago and we got to go to Boston as well and go to the Fidelity chart rooms at the Fidelity headquarters. And they've got over 100 years worth of data that they actually represent and show of the S&P 500. And then it's overlaid with all the associated presidents and overlaid with recessions. And what's really interesting to see is since 1933 till now, whether or not it's a Democrat or Republican, the markets still continue to go up. And yeah, there's obviously going to be ebbs and flows, but the best way to demonstrate this is if it's a divided Congress and Democrats win, the S&P from 1933 till now has delivered 13.6%. Now, if it's a divided Congress and Republicans win, the S&P 500 goes up 13.7%. So 0.1% of a difference. It's really marginal, and that just shows like if you're invested for the long term and you have your asset allocations correctly structured, you'll be okay.
That's right, and major policy changes can really only occur if the White House, the Senate and the House are all under the control of the same party, which is a situation that historically the Americans don't like. They tend to ensure with their ballots that that doesn't happen.
And to that point, I will say, looking at the polls and where the markets are currently positioned, along with where Congress is currently positioned, even if it is majority Republican, the markets, if a Democrat wins and it's a Republic Congress, the S&P delivers 13% from 1933 till now. And if it's a Republican Congress and Republican wins, the markets actually deliver 12.9%. So it's really marginal, as you can see.
Mishan, thank you very much. We've got a very interesting few weeks as we wait for the final flurry of campaigning, and the rhetoric will ramp up even further. It's always enjoyable, but maybe it is noise at the end of the day, and the world continues on.
Thank you.
Thank you, Mishan.